All right, guys, welcome to the Wavecast. Let's just turn it off. So, can you guys hear me okay? Right, mic test, mic test. I'm always like testing this new technology. I've got like a slightly different setup to what I had in the last few weeks. So, can you hear me okay? Is the audio working? All good? Shirley can hear me. Right, so welcome to Wavecast number 9. I was in Tenerife last week, but now I'm in a much nicer place. That's the ocean behind me. I don't know if you can see that. You probably can't see that in the distance. But yeah, I've got such a cool setup. My the girl I'm staying with was saying the same thing. I've got like this amazing studio setup that's 100% portable. I've got like a light that weighs a feather. I've got this beautiful portable mic. This baby has been with me for like almost a decade. I've got a strong emotional relationship with this microphone. So yeah, welcome to Wavecast number 9. We've got 10 people here. One day there'll be 100 people here or 1,000, but you guys are the first ones. Right, there's an echo. I think I know why that is. I think it's going to be because of this. Can you guys hear now? Is that better? See, like, I'm just testing all the tech. See, I'm better at technical analysis than I'm at actual technical stuff, right? But I'm bloody good at technical analysis, and that's what we're going to go through today. Yeah, so I had 2 feeds going on from different directions. Right, so the same format as we do every single week. If you've got any questions about wave counting, any module you're stuck on, anything you're just like, man, I can't wrap my head around this, these bloody complex corrections, whatever it is, right? Let me know. Now's your time. It's me and you. Very intimate, right? Anything you want to know, put your question into the chat box. I should have just realized there's this little square in front of me. Let's see if I can get rid of that. 1 second, guys. See if I can get rid of this bloody... There we go. Fixed, I think, right? Sweet. Working? Okay. So, right. So we're going to start the same way we start every time. Give me an emoji which you think summarizes your entire life in this very, very moment. Right? Out of all the emojis you can possibly choose, give me the emoji that symbolizes your life in this very, very moment. And I'm not going to start until I have at least 5 emojis. Janus is hungry. Yeah, I'm hungry too. I'm going to have some food after this. Lee says, I thought you were a god with the echo. Well, no comment. Lee is feeling crushed from the weight of his existence. Carolus is not happy. Oh dear. Carlos is feeling grateful, I suppose. Right, that's your 5. Right, let's get started. Let's go straight into trading view. All right. So any questions? I'm going to pop back in the chat and see if there's any questions in a bit. But I think you guys just like seeing me just get stuck in and doing the wave counts. So I'm sure those of you saw my this morning, Mystic Moore's Magic Monday Morning Ministry of Manifestation or something, where I showed you what I was seeing in the charts. Now, for those of you who look at the wave counts I post and you stay updated with the comments, because I post a wave count and then usually I leave comments as the day progresses. Not always, because sometimes I'm usually really busy, but if I am watching the charts, then I'll post comments through the day with my updates, my thoughts. And then yesterday, the morning wave count, I was saying, well, look, we're at a crossroads right now. We're in we're clearly in some form of corrective triangle. Now, normally, a corrective triangle, by virtue of being a correction, it's a continuous, it's a continuation pattern, right? It's a holding pattern. Price will continue in the direction that it was moving to prior to entering the correction. However, I wasn't sure whether we were seeing a correction in the in the Y position of a combo correction, in which case the price would go up, or we were seeing the X in a different position, that would have meant price would have been going down. And I wasn't confident at that point which way it was going to go. I was still leaning on my primary, which was that it was going to be a bullish move, and that was how I started yesterday. And then towards the end of the day, where price should have, where that triangle should have completed, which should have then resulted in a noticeable move to the upside, I wasn't seeing it. Price started drifting sideways. And by the way, hopefully the cars aren't too much of a distraction. This is a directional mic, so hopefully it's not picking up too much, but there's a road right next to me. So this is a key thing with wave counting. If you do a wave count and your wave count expects a certain action and you don't get that, the classic is you think you found a first wave and a second wave, and you think the third wave's coming, right? Or what almost always comes with a third wave? Volume, strength. So if you're expecting a third wave and you get like a weak sort of sideways. All right, and we're live. And for people watching this as a recording, there's not going to be a fancy intro because I already bloody did this. I introed it. I said hello to everyone. I said welcome to episode 9. And then I said, right, let's go look at the charts. And then I went and turned something off that I shouldn't have turned off. And the mic then cut out. And then for 20 minutes, everyone who's now sitting here was just sitting here listening to me, like, well, not listening, but watching me flap my lips, talk about analysis that you can't hear. And now I'm going to do it all again. So this is going to be a shorter live stream because we're only going to be doing it for half an hour because I've got to get back to doing what I was doing. So, yeah, sorry, guys. So you can hear me now. So I need a producer to sit with me and do all this stuff for me. So, all right, let's dig in. Yeah, Carlos says great sunset. I don't know if you can see the ocean. Yeah, you can. That horizon, that's the ocean. You can't see that because you're focused on my face. Unfortunate for you guys. But yeah, I'm in Tenerife. I'm in the west of the island, and it's gorgeous. I don't even need this jumper on. It's t-shirt weather. In fact, just to prove the point, I might just take this jumper off because I'm actually a bit warm. So, right, let's get straight into it. So I'm going to repeat everything that I just went through. What did I start off talking about? I swear I was saying some really bloody good stuff. That was it. Okay, so let's go into TradingView. And okay, so I started off. I started the wave count this morning by saying that the comment that I left on the previous wave count changed the outlook for my outlook for Bitcoin. Because another thing I did, you guys didn't hear, I apologized about the there's a road nearby, so I don't know if you can hear the cars going by. Hopefully it's not too bad. So yeah, yesterday's wave count was bullish, although I did say that we were at a crossroads and I wasn't sure what was going to happen because price seemed to be was bound inside a correction, and normally a correction is a continuation pattern, right? But I wasn't sure whether the correction was at the Y wave of a double combo, in which case we'd be expecting price to jump up, or we were in another part of a correction, and therefore it might mean that price was going to go down. And I wasn't entirely sure. And I said that. I said price was at a crossroads. But I said, but I was based on the macro, based on the beautiful geometry I was seeing in this macro daily chart. I said I'm leaning bullish. And then later on in the day, I updated. I left a comment, which I always do, usually under the wave count, saying, you know what you would typically see after a triangle correction is a strong move in the continuation direction, and on the completion, or what I believe to be the completion of the triangle, I got a sideways correction, like another triangle, a sideways movement, and that made me lose confidence in price shooting up. And I said, I've turned bearish. I went back to this macro chart and I extended rather than this being the complete Y. I said, okay, A, B, and we're expecting another move down. Oh, my lights turned off. And then went to bed. Woke up in the morning to price having done just that. So price came back down, and now it's come down to the lower parallel right here. So it's come down to meet this beautiful geometry that I'm seeing, and beautiful geometry that I want to keep. You've heard me say you should never fall in love with your analysis. Well, I love this pitchfork. Now, this isn't my analysis. This is the pitchfork. The pitchfork's doing this, but we've got this beautiful touch of the median line, and this wasn't price going up to meet the median line after this pivot point. It's the other way around. The pivot point is down here, and prior to that, we've got this beautiful touch of the median line. So this is beautiful market geometry. If you go back in time, we've got a beautiful touch right there on the center point. You see that beautiful touch there, another touch here, another touch here. So it's geometry that is price is responding to geometry in higher dimensions, meaning price here is responding to a line that isn't going to be effectively noticed or realized until later in the future. But let's not go down that rabbit hole now. So I love this geometry, but you shouldn't fall in love with your analysis. So price has come back down, and it's now met this lower parallel. But this, if this is an A or B, I mean, there is, still a chance this could be a continuation of this B. We're going to get perhaps even a bigger triangle, A, B, C, D. It's going to come up one more time to form a macro E, and then we're going to get pushed down. But the thing is, I'm not seeing a strong break in market structure, and then a pullback to this lower parallel to give us a potential trade setup. It looks more like a consolidation before price does continue down lower. So as of now, I'm bearish. And one thing you saw me mention is this pitchfork is really, really nice. I love this blue pitchfork because price came back down, lower lows, lower highs, and then we got a really strong turnaround. And we didn't break what would be the ultimate lower high right there, but we did get enough. We did make enough progress here for this to be poignant, and then price came back down in a corrective pattern, and it did not exceed this lower point. It created a higher low, and then we had this strong move here to the upside, which broke all of these lower highs here. It broke this one, right? Now this one would have been amazing, but it broke this one, so that was strong. And then it came back down, and it tested this lower parallel perfectly. Came up, came back down, tested it again, tested it a bunch more times. It was hugging this lower parallel, so it was responding to the pitchfork, and then it broke down. So because it was responding to the pitchfork, what rule, and this is the point I got to in the live stream when I went to the chat and you guys were like, we can't hear you. So now I'm putting it back to you. What rule now comes into play? For those of you who are on module 19, I think I mentioned this in module 19, possibly 18, but definitely if you know what I'm talking about, what rule do we now have to consider, or should we consider? I'm going to go into the chat and see if you guys are one step ahead. Janus is on it, right? Janus, straight there. The Hagopian rule. The Hagopian rule, right? Now, you saw me mention this in the analysis this morning. The Hagopian rule states that you want to project price downwards the same distance that price attempted to reach the median line, which is this distance. And that distance is this line here, right? And that would be $14,440, yeah? So Hagopian's rule states that once price breaks down past the Hagopian line, and the Hagopian line is the same line as the bottom parallel, the lower parallel of the modified Schiff pitchfork, which is this line here, right? So the price came back down, broken through, and it's kind of chopping around. So when I did that post, price had come down, and it was about here, right? You can see here, that's like 9 in the morning this morning. That's when I did the wave counts, so the analysis. So it's about here. So now you know that with the wave counts that I don't do trade setups because they require more time to do them responsibly, and more time that I don't right now have. I've got the time to do these kind of quick forecasts, but to do actual trade setups where I'm technically saying, look, this is a trade that I'm doing. This is what I would sort of recommend that you do, kind of, with a obvious disclaimer that I'm not responsible for what you do and stuff. I haven't got time to do those responsibly, so I'm not doing trade setups, right? But this is a trade that I did enter, and price did come, because you always let price come to you. You never chase price. So I let price come back got filled, and now here we are, right? So we're going to wait to see what price does. You can see the short is just a little bit above this market structure just here, right? So very, very close by, but it is by, we got a lower high here, right? This was the most recent market structure. We've got a lower high, couldn't break past that. And then we've got, it looks like double bottoms. So we're not getting clear, a clear downward move. I'd want to see price break down and clear this lower low. Oops, right there. That's the level I'd want to see broken. Lower low, right? And what we don't want to see, well, my stop loss would catch it, but if price breaks out above this level here, then it's it's not a great sign. That's our, let's move over there. That's our lower high right there. Okay, so let's see what price does, right? For this, I think it's a nice trade. We've got like a reward to risk ratio of 7.89, and according to Hagopian, this level is just like the minimum level that we would. There's a high probability that price will reach, but whether or not it reaches that entire that point or not, when this is something that we're going to be going into in module 21, I believe, right? And we're going to go really deep into the practical nature of the trade itself, the best way of finding that entry, executing the entry, and then managing the trade as it unfolds. How you manage your stop losses, how you move your stop losses, how you make your decisions for moving your stop losses, and then how do you exit. So we're going to do an entire module about that specifically. So even if it doesn't reach this Hagopian target, we're going to be safe, because we're going to, as price comes down, we're going to be moving our stop loss, and then the stop loss becomes a profit loss, right? A profit stop, because then you get profit stopped out, but it's at a profit at that point, and it's the decision of how you move that down. Because just as important as the logical thinking behind why you would enter a trade, just as important is the logic behind how you manage that trade as price goes on, right? So yeah, this is just a recent entry, so we'll see how things unfold from here. But a nice little stop, great reward to risk ratio, and in this case it's almost 8-1. And when you've got a reward to risk ratio of 8-1, then assuming it does reach target, or potentially could reach target, which according to Hagopian rule that it could, it means that this is the cool thing, like the difference between a successful, consistently. I just realised that I've got a square on my head again. That should get rid of the square. You guys see the square on my face? It's so annoying, man. I'm so shit with all things technical, apparently. Can you guys see that square? No square. Oh, okay, it's just me then. Yeah, you can't. Sorry, guys, it's just me. I was looking in the screen of the camera. Jaina says the echo is still there. How about now? God. There's some things I'm great at. I'm great at chess. Well, it depends on who I'm playing. I'm great at technical analysis. But man. Okay, so back to trading view. So yeah. So if you've got a reward to risk ratio, if you're only ever trading with at least a 3-1, you've heard me drill this into you guys. You're trading with at least a 3-1, like it's the minimum a 3-1 reward to risk ratio, but ideally it's 5-1, 6-1, because then the higher the reward to risk ratios of the trades that you enter, it means that you could be wrong most of the time, right? You could only be correct 30% of the time, and you can still be profitable. You can still be consistently profitable. One of the mentors that I follow, he's not alive now. He's dead now. He doesn't know me, never knew me, but you know, he's got amazing material, and he's was one of the largest currency and commodity traders in America, and you know, managing multi-billion-dollar funds, right, hedge funds. He said that I was saying this to Shaman the other day. Like, wrap your head around this, right? This is like the best, some of the best in the world. And he was saying that only 2 out of 3 of his trades are right. He gets stopped out. A third of his trades get stopped out. 1/3. He's only right 2 out of every 3 trades. So approximately a 66% win rate, right? This is the best in the world, managing multi-billion-dollar hedge funds, right? One of the most like successful commodity and currency traders in America is only right 2 out of every 3 times. Get that in your head, right? What the difference between a consistently profitable trader and one that fails, assuming that they're sort of good enough with their analysis, is because they just engage in trades that have a terrible reward to risk ratio, right? If you are only right 1 out of every 3 times, so you're wrong, you know, out of every 3 trades, 2 of them get stopped out. If you can have a reward to risk ratio in that example of at least 4-1, you will be consistently profitable. It's the mechanics of a consistently profitable trader is in the reward to risk ratio and being disciplined. And if a trade setup is, if you're seeing a potential like trade, but it hasn't got a strong enough reward to risk ratio, you do not enter that trade, because that is the difference between a successful trader and someone who's not successful, right? You're not stacking the odds in your favor. The goal for everybody is to try and reach a 50% ratio, a 50% success rate. If you can achieve a 50% success rate, that is amazing. You'll be rich. You'll be rich. If you can match that with a effective risk management, which involves making sure that the reward to risk ratio is never less than 3-1, and if you can achieve half your trades being successful, it's like you've got a money tree. You will never have to worry about money ever again, right? But it's about being disciplined and understanding that, right? And anyone you hear on YouTube or anywhere else who says they've got a success ratio of, you know, like 90% or something, they're either, well, I was going to say they're either lying to you or they're deluded, but the chances are they're lying to you. The chances are they're lying to you. I'm telling you that one of the most successful commodity and currency traders in the world admitted that, you know, only 2 of every 3, I say only 2 of every 3 trades were successful and a third wasn't. And here's the interesting thing. Out of those trades, before doing the trade or as he puts the trade in, he doesn't know which one's going to be successful or not. He doesn't know. He couldn't tell you, yeah, I've got a strong feeling about this one, and it turns out to be the strong feeling turns out to be right. Right? They all look like good trade setups, and until the trade unfolds, he doesn't know which ones are going to be the ones that get stopped out or not. So if you're thinking that you should know, or you're getting frustrated that you're getting stopped out like half the time, and you're like, oh man, I suck. Like, no, that's amazing. If you only get stopped out half the time, well done. You have achieved a level of mastery that if you can combine that with effective risk management, you're guaranteed to be rich. There's nothing stopping you, right? Apart from the government or health, you know? So, so keep that in mind. So anyway, that's kind of the outlook for Bitcoin right now. I'm obviously short, and that's what I'm expecting. If price does come and break this high, doesn't stop me out, comes down low and creates a higher low, I'm not going to change the trade. It is what it is. I've put my stop. I've made my decision, you know, and it's going to play out the way it plays out. And if price does, I think at the end of the analysis this morning, I said that if price does break out and turn up higher now, obviously I need to redo this wave count. You see, I haven't changed this wave count since yesterday. This is a wave 1, and it says here the wave 2 ends here. Clearly, that's not the case. So these waves need to be updated, and you know I'm going to do that anyway. But if price does break up higher and it breaks this level here, right, then I would be then, okay, maybe we are this lower parallel is going to be respected, right? So I'd want to see price break out above at least this lower high. So this lower high. Ideally, it'll break out above that lower high, right? And then come back and test the lower parallel. So the two lower highs I'm looking for it to break is this one. Let's just mark that in. Lower high there, and then this one right here. Lower high there. Oh, it's not showing up. That means the connection's failing. Let me refresh this. It usually fixes it. So I'm waiting for Price to do that. I don't need your deal. Okay. Let's make that cleaner. Let's try that again. This lower high. Lower high. Okay, yeah. When I do that and it doesn't show up, it's because the connection to TradingView is failing. It's probably because this live stream is taking up the connection. But you get the idea. You see this lower high, this lower high. I'd want to see price break at least past there and come back down. And I'll look at the price action and see what we think. Because again, this still feels a bit like a consolidation. If price breaks out above that lower high, then that like up here, that would be a really good sign. A really good sign that this lower parallel is going to hold. And the prior wave count might still be in play where we are going to begin this fourth wave move upwards. So we'll see what happens, right? We'll see what happens over the next day or two. So, I mean, look, that's kind of my analysis for today. There's nothing else to talk about. I've been going on for an hour, even though that for guys watching the recording, it's going to be like a 25-minute wavecast. But any more than an hour of me just yapping on like this, and I start to get tired. Maybe it's my age starting to show. Oh, Jesus. Now you guys can't see the bloody video. Oh, God. Okay. That was 4 minutes ago. Let's turn that back on. See if there you go. Jesus. Okay. Well, you guys heard me. Maybe you could you can kind of like feel what I was saying. I don't know. You haven't heard me for the last 4 minutes. So I was talking about like the highs and like prices. I want to see it break these levels, right? And I was talking about this level here and this level here, right? That's what I was saying. So that lower high there, that lower high there, if price does turn around and break those two levels, that would make me get my attention and make me look at this for a potential entry. Maybe we'll have to see what price action does, and it might make me go back to thinking that we're going to start this bullish long position. But right now, this short is in play, and we'll see what happens. So yeah, I'm going to wrap it up there. So apologies for the gremlins. I don't know. I'll get better at it, I suppose. But that was Wavecast episode 9. Give me an emoji letting me know how you feel about today's Wavecast. And I want to see at least 5. There's 15 of you here now, so I want to see at least 5 emojis. What you think of today's Wavecast. It's going to be encapsulated in a single emoji. I think Lee's got it right, but everyone's going to have their own subjective experience of this Wavecast. Janus thinks 100%. I think Janus likes the fuck ups. He likes the chaos. Cool. All right, wicked. Nice. Let's wrap it up. I'm gonna go get some food. So, thanks for joining despite the constant crazy gremlins. That was episode 9, and I'll see you guys. I've renamed the. Maybe we'll get some input from you guys inside the community. Rather than calling the community King Silver Lions, because you guys are the Lions, I'm calling it the Lionosphere. And I've now scheduled every 2 weeks, and there's one starting in a couple of weeks, a live stream that's similar to this, but the live stream is called the Lionosphere. And it's going to be a live stream where I update you guys and share with you what's happening in the broader ecosystem, what's happening with King Silver, the development, the vision, just the progress, and also just to kind of get feedback and any questions from you guys about what the hell's going on with that, how it fits into everything. So obviously Wavecast is for you guys, you're like paid premium students. It's a private Wavecast that's not open to the public, but the Lionosphere stream is going to be open to just anyone and everyone, and it's about like what is happening, the vision for Kingsilver, and that's going to be every 2 weeks. So go and RSVP that so you guys can make sure that you join and you're there, and yeah, and then I'll be doing this again next week. So cheers for being here, guys. I will see you in the Lionosphere and on Wavecast episode 10 next week. See you guys later.